Does it make sense to own physical precious metals like gold? Is it going to protect your net worth in a recession? What if everything goes down? Should I have coins to trade for food? In this video, we're answering each of these questions so that you can be prepared for anything. Maybe not more prepared than bunker people, but more prepared than you were before. So hopefully you can pick up some golden nuggets of wisdom today, and let's get into it. Gold used to be a standard in our economy. The US has moved away from the gold standard, but that's a story for another video. When gold was the standard, that meant that our money was actually backed by something physical, precious, and has scarcity. Since then, the US dollar and other dollars alike are considered fiat currency, where their value is based on the government that issues said currency. Essentially, the US dollar has value because the US government says it has value. The US has over 8,000 tons of gold in reserve, and that's not even close to enough to back up all the cash in our economy. So it's not backed by gold. It's essentially backed by faith in the US economy and its trade relations. But when the dollar loses value due to different factors in the economy, it's only natural to ask yourself, should I hold gold to curb inflation so that my dollars don't lose any more value? Let's look at the history of the gold market. Bear with me. First, this comes from macro trends and has been adjusted for inflation. Back in the Great Depression, gold increased dramatically, gaining a 75% increase in value, while the stock market lost 80% in the same period. In the early to mid 70s, when the economy hit a recession, gold increased 63% in value, while the stock market dropped 30%. In the Great Recession of 2008, gold's value increased by 14%, while the stock market dropped 38%. Total over the last 100 years, accounting for inflation, gold's value has had an increase of 447%. And the stock market, according to the Dow Jones Industrial Average, has provided a rate of return of 1,817% adjusted for inflation. Here's the problem though, most people aren't 100 years old and won't reap the benefits of those kinds of returns. So let's look closer at about the last 50 years, since 1970. The Dow Jones rose 440% adjusted for inflation. Meanwhile, gold rose an astonishing 603% adjusted for inflation. So does it make sense to own gold? Let's just say it definitely depends on the segment of time in which you look. But let's get a little deeper into the pros and cons of owning gold. Then I'll share one surprising fact about gold versus stocks that massively impacted my opinion of holding precious metals and might help you decide if this is something in which you want to diversify. Pro, gold does tend to do well in recessions. As mentioned earlier, gold tends to gain value in recessions while the stock market loses value. This is because people get fearful and want to put their money into something that's retaining value, especially when inflation hits hard. Which brings me to my next pro. Pro, gold is essentially a commodity, so it's tradable like other commodities. Take oil for instance. That's a commodity and its value goes up and down just like gold. Some people purchase gold to protect them in case you know what hits the fan. Then they have something else to trade for other goods and services. This has been an interesting argument for precious metals for me in case everything goes down. I'm not convinced we wouldn't go back to an economy of just trading commodities like food, fuel, blankets, that kind of thing. Venezuela's economy utterly tanked in 2018 due to some political issues, to the point where they experienced hyperinflation of more than 65,000% according to Statista. And according to a Forbes article from August of 2018, gold's value increased by 3.1 million% just since January of that same year, leading Venezuelans to allegedly start to purchase goods and services with gold flakes. Wild. So does gold really help in a tanked economy? Kind of seems like it, at least in extenuating circumstances. Pro, gold is shiny. That's all I have to say. Now, before we get into some cons, give this video a like if you found this beneficial, because this may be the most heavily researched video I've done, and it took so much time. Thanks in advance. Con, gold in some ways is similar to investing in single stocks. Basically, you're hoping to buy low and sell high, especially if you're trying to curb inflation. The problem is it can be pretty volatile. If you're holding it for security or as a long-term investment, then that's a different situation. When you buy single stocks, though, it requires precise timing with the market to earn any money, especially if you're purchasing it for the short term. That's why it's possible to retain your dollar's value in gold, you also can lose a lot of money if you buy and sell at the wrong times. And timing the market is a challenge for professionals, much less the average Joe like you and me. Con, gold requires storage. There's lots of companies out there that will take your money and store your gold securely for you if you have more than what can be held in a safe deposit box. This model of investing in precious metals has always made me a bit nervous though, because if the company goes bankrupt, then you're likely out of your investment. Now wait a second, isn't that exactly what investing in single stocks is? Absolutely, which is why I don't recommend it. I like the diversification of mutual funds and the like for spreading out invested money across many companies and industries. Now, to be clear, there are ETFs that are focused on investing in gold, so you can at least invest in a fund that's a bit more diversified, but you're not going to have physical precious metals. Speaking of which, back to storage. You're going to have to keep your gold secure if you want to physically own it. Like I said, it could be a safe deposit box, but regardless of where you store, obviously it opens up more opportunity for getting robbed. So insurance may be something that you have to put extra money towards and will increase the cost of owning precious metals. Here's the fact that massively impacted my opinion of holding precious metals. Gold is not an income producing asset. Yes, it does tend to grow with inflation. However, Barnett Sherman, a contributor to Forbes, wrote this article comparing the growth of stocks to gold and compared roughly the same period of time that we looked at earlier from 1970 to 2020, which showed gold increase 5,300% compared to the S&P Composite's 3,700% return. Then he goes on to say, but that comparison is wrong. The comparison leaves out the eighth wonder of the world, compounding. Add in compounding and now make the comparison. That same investor buying the S&P Composite in 1970 and reinvesting the dividends quarterly would have seen a gain of 68,430% through September 2020. And that is the problem with gold. Gold pays no dividends, it cannot compound, it does not have economic growth, it does not innovate, it does not generate cash flow. It's just a piece of inert metal. That changed my whole thinking on the subject. Because with investments, you can, in theory, keep $1 million in the stock market, live off of the 6 to 8% return, so like 60 to 80 grand, and never touch that $1 million investment ever again. With gold, if you're selling it off, you're eventually gonna run out of the physical asset. So is it a good idea to invest in gold and other precious metals? Honestly, it's up to you. I'm not about to get on this video and tell you to go buy gold. When it comes to my own experience with precious metals, honestly, it's pretty limited. We own a little bit of silver, and that's about it. I like having some on hand, but it's not my number one concern financially. Ultimately, owning precious metals are not generally going to build your wealth, at least not immensely, because you don't get to reap the benefits of that compound interest. It can help hedge inflation a bit, at least historically speaking, and it apparently can be a tradable commodity in the event of an economic collapse, at least when we look at world events over the past 10 years. But it's a challenge to store, could be more expensive to own due to insurance, and can be very volatile in its value. What I would recommend is if you do choose to throw some cash into some precious metals, at least wait until you've paid off all your debts. Because what we're about here on this channel is getting you financially free, not preparing you for a financial or economic collapse. Let me know what you think of this topic and give this video a like if you think this is beneficial. And subscribe here and watch this video next.